Having dropped by 20% in 2018, the listed property funds market has improved, with the ability to invest as little as 500 rand a month in the shares in malls, office spaces and warehouses. The sector has historically outperformed numerous other asset classes, but the share manipulation allegations against the resilient group of companies led to investors losing at least 120 billion rand last year. Resilient comprises of close to 40% of the local property index.
Listed property was the best performing of all asset classes. It beat equities, it beat bonds, it beat cash. 2018 was a disastrous year for listed properties, and listed properties came off varying between 20% in one or two to as much as 60% on one or two others, where there was some corporate problems and question marks about how they were valuing their properties. But overall, property funds dropped about 24 to 25% last year.
Oversupply of listed properties also having a negative impact on investor returns. The malls are under pressure to secure good tenants and in some instances are forced to lower their rental price to attract tenants.
We look at other indirect factors such as the Edcon ability to get significant rental decreases from a significant chunk of their landlords, showing that those landlords are under pressure at the moment and therefore they were willing to accept effectively a significantly lower rental. Of course, they're getting some kind of stake in Edcon at the moment, but that wasn't their purpose. Their purpose was not to take a part in, for instance, a retail company or a shops business. They were providers of property, and the fact that they had to do that should indicate that they're under pressure at the moment, that there's not enough demand in those places. And you see individual malls out there under a bit of pressure, and there's indicators for certain malls that foot flow, for instance, people walking in the mall, has significantly dropped over the last year or so.
You can buy listed property funds directly from the Johannesburg Stock Exchange or through a stockbroker. And unlike residential property market, you don't have to incur transfer and bond costs as well as estate agent fees. But investors are urged to do their homework in selecting good quality listed property funds to get good returns. Just what are the costs involved with this kind of investment?
If you buy into a fund, the fund manager, each fund that holds listed properties will have a cost. It could be anything between 0.75% to 1.25%. There may be a broker, a financial planner that's advising that fund. They may get 0.5%. Or you can buy listed properties through a stockbroker, where you can buy directly into property, and that depends on your stockbroking account, and you could pay anything around about 1.25%, again depending on the size of your investment into that property fund.
Currency volatility continues to impact the sector, with the weak rand having a negative impact on returns in the retail sector. If the Reserve Bank was to reduce interest rates, this would raise the value of property funds.
Listed property is very sensitive to the couple of things. Firstly, of course, we need to look at the economy, but also to the interest rate. Listed property companies generally are competing against bonds. They have the same kind of outlook in terms of more security, income coming in, and bonds do the similar kind of thing. But the thing with listed property is that if the bond prices are high, not just do you get the comparison with bonds being, or bond yields are high, not only do you lose out in comparison to bond yields, your costs also go up, because many listed property companies also have big, amounts of debt, large amounts of debt. So if the bond rates are high, if yields are high for bonds, they're going to pay more to service that debt.
Investing in listed property funds has its pros and cons, especially with the malls battling to secure good tenants. But experts say it is still a better option than the residential property market, because you don't have to pay for maintenance costs and rates and taxes. Naledi Matlapeng, SABC News, Johannesburg.